Okay, so in this particular video, we're going to go over how to trade. We're going to go over how to enter a conservative trade and setting up stop losses and profit targets and following and exiting a trade. So for the purposes of this particular video, I've added two different lines onto the chart that are not normally on the chart, and let's go see them right now. One line is this pink line that represents a recent 4 high. The trades we're going to discuss are these green lines right here. This trade on this arrow, this trade, and this trade. There's 4 trades. 1, 2, 3, 4. Okay, those are the trades we're going to discuss. There's 2 lines I've added, and one is a recent high of the 5, which is this magenta line up here at 11,392, because that's where they would have been. This line would have been red. Okay, this line would have been red on your chart. And if you want, well, I guess we can just go ahead and make that red and add another white line. But now for these instances, we want to trail it. We want to watch it break it, and we want to see it different than the other one. So let's leave it alone. The recent high is a magenta line right there that we've added, and normally it would be red. This line would be white. Right now it's kind of pink colored. Okay, so right here at this particular point, we only have 432 in direction. All right, and in direction, not in order. But there's a 4-3. There happens to be an institutional wave, and there's a 2. Now, I'm going to blow the chart up a little bit. Remember, the pink line is the recent 4 high. The magenta line is the recent 5 high. So let's blow this up so we can see. Okay, so right here we have a day high. You can see that we broke the day high. We reset a 2, and then we gave an arrow with a higher low from this 2. That's a qualified trade. There's your entry. There is your aggressive stop loss. Back here is your conservative stop loss. In this case, the aggressive stop loss would have worked. Now you may ask, how do you trade this? And how do we get our exits and our first positions out? Well, when we entered this trade, okay, let me move these stops out of the way. We'll reset them. There would have been your first stop, and there would have been your second stop. Now you can enter the trade in multiple ways. You can get in MT4 and figure that out. You can use the new order platform and set your stops and everything before you enter the trade. You can put a trade in down here and then move it up to your arrow and then pull your stop losses down after entering a trade and your first target up. But whatever you enter on the trade, if you're going to enter and carry 2 positions, okay, so if you're trading 0.02 lots and you want to make 2 trades, you can make 2 trades with 0.01 lots, or you can make 1 trade with 0.02 lots, and you can set another trade that is a sell trade up here for 0.01 lots. There would be your first target up here. So let's go ahead and put it in there. Let's pretend that we're go ahead and in the trade, and we wanted to put this in there, and this is going to be our first target. Boom, right up there. So we get in this trade, and the trade starts to move. It breaks this day high right here, breaks this day high here, and this day high here. It just broke a 4-day high, 3-day high. Wham, but it has not gotten up to our level yet. Now, these white lines are old areas. They're old 4s. They would have been on this chart already. They are old 4s. This is the most recent 4. As you can see, it broke through, gave you an entry, broke through, hit this most recent 4, and came back and retested this area. Now, if you put a target in right here for 1 trade and then move this to break even, you would still be in this trade. That's fine. If you wanted to carry on and just follow as it breaks through highs, that would be fine. So in other words, there's your new high, and the next day when it breaks through this high, you would move your stop loss up to the day low. Then the next day it breaks up and closes, creates a new high. You move your stop loss up to the day low, and you keep going, okay, until it would either come back and take you out right here, or if you knew that it was going to go to this particular point and then come back down, then you could exit as soon as it gives any kind of a lower 2 or comes back and takes you out. So in this particular case, you could have taken 1 position out here, trade at the low of the days. It keeps giving higher twos, higher twos, higher twos. Hits this 4 from way back there. Yeah. When it hits this 4 from way back there, you can then start squeezing the trade. It hits the floor, it hits the 4, it comes down, it starts heading back up to the 4. You can move your stop loss up to right here. And the closer it gets to this 4, you can start trailing it up on these candles and get out on the 4. That's trade number 1. Now, your new high for that prior 4 would be right here. And remember, right up here, you've got a lot of support from an old 4, your 5, your current 5 high, 5 short, yeah, which they normally go up and do takeouts on the 5 shorts. So here we go again. We have a 432 in order now. Now we have a 432 in order. There's the high of the day. It breaks the high of the day. There's the 2 long. There's the low of the 2 long. This is a higher low on the 2 and an arrow. There's another entry right there. Now your recent high is here. You have to be patient and let this trade move. Okay. Then we have a 2. There is your aggressive stop loss. There's your conservative stop loss. Then it comes down and gives you another entry. Now, if you happen to enter this trade and you want to enter this trade, what you can do is move this particular stop loss up to here a little higher. Take what equity you've saved in from this entry right here and enter another position with maybe a little bit smaller or the same size, because you just broke another day high just before. Reset the 2, gave another arrow. There's your entry. Your new high of the 4, and consequently your new first main target is here. This is the top of this 3 short, and it is also the top of the 4, and that's your first target. Entry, entry, it breaks through the target. Now, how do you trail going for the top targets up here? Well, once it reaches the top target and breaks a high, you want to let it relax. If you were to come up here on the day low and move your stop loss to the day low, you would have barely made it. In this particular case, I would wait. You're so close to it, give it some room to breathe. There's another break of the day high right here. There's a 2 long. There's another arrow entry right there. Okay? And you would be in right there. Comes back, kisses it to get you in, kisses it to get you in. Plenty of time to get in the trade. This one pushes right through this top. So you say, Dave, is my final target right there? No. No. Leave your final target, leave yourself some room, and I'll show you how to pull this trade all the way up to the top. So you have a trade in here, you have a trade in here. When this fires again, your trade goes in there. You can move these 2 positions right up to this prior day high, prior day low right here. They are now in profit, so you can take another full trade right here with your stop loss there. It moves, pushes right up through the top, and then you start trailing. Your first exit for half of this position, if you're trading 2 parts of a position, is going to be right here. Your next exit is going to be way up here somewhere, and let's show how to trail this. You trail, breaks a new high, you trail, breaks a new high, there's a 2. Now, if you move your stop loss up right here right away, you're going to get taken out. Be patient. Know that this thing is going to roll up to the top and keep on rolling. So we have a high right here, and we have no hedge fund swings, arrows, or anything in here. When you don't see any arrows or hedge fund swings or anything, it's pushing. So leave it some room, give it some room, let it breathe, and all of a sudden you see a 3 long. When you see the 3 long, then you can go ahead and bring your stop loss up here and say, man, if this thing starts turning around, I don't want to be in it anymore. It breaks this high right here. So this is your new break. It breaks this high. Then you trail your stops up to the bottom of this area. It comes down, gives a 2 short. Gives a 2 long. Yeah. Then it gives a 2 short with a lower high. Now you got to squeeze. You've also already broken the low from this day. So you have an option. You can move your stop up to here, right? Then get out, because now I have 4-3 in order. I've pushed up for a few days. There's a lovely high up in here. My stop is here. I have a low of the day here. You can move your stop loss up here and get it taken out, or be patient, wait, let this too short fire. Know that this is your high up here. When this too short fires, move your stop loss up here, move your final target up here, and wait for it to break this day high and then take you out of the trade. It breaks the day high, takes you out of the trade. Your stop loss is here. When this too short fires, your stop loss is here. Yeah. Because now you have a 4-3-2 the opposite way. So you better be getting out pretty soon. And you're going to get out almost at the very peak of this particular movement, with your entries down here around the 110,602 level, 110,602, 111, something like that, 110.6, 111, and your exit up around 113. Okay? And that's how you let the trade breathe, but follow it to preserve profit and get your best exits. And then, of course, the same thing on the way back down when you see shorts going the other way. All right. So like in this particular trade right here, if you got a long in here anywhere, I don't know if there was one, but let's see. I don't think there was. I don't think there was a trade there. There's the break. There's a 2, no arrow. Nope, nope. There was no trade. There was no trade in there. So yeah, excellent. Perfect. That's how you would trade it. That's how you would enter your trade. That's how you set your stops and where you would put your stops and what the lines mean on the chart. And that's how you trail your entries to get the maximum benefit out of the trade once it starts to move. See you on the inside.